Hey everyone, and welcome back to Brijesh Kapoor Finance. Now today's update is super important if you live in Canada, have a mortgage, or are just trying to make sense of the economy right now. So the Bank of Canada just made a big announcement. They've decided to keep the interest rate steady at 2.75%. Now that might sound boring at first, like okay, no change, but trust me, there's a lot behind that decision and it has real effects on your money. Let's break it down in plain English. So first, what exactly did the bank say? Well, they met today and chose not to raise or lower interest rates. They are basically saying, let's wait and see. According to Governor Tiff Macklem, who's the guy in charge, the economy is giving mixed signals right now. On one hand, we had some growth. The GDP grew by 2.2% last quarter. Now that sounds like good news, right? But here's the catch. Most of that growth came from companies rushing to export and stock up on inventory before new US tariffs hit. In other words, it wasn't natural long-term growth. It was more like panic buying on a national level. So, they are not convinced that this growth will continue. In fact, they expect the second quarter of the year to look weaker. Now let's talk about inflation because that's always the hot topic. The headline inflation rate dropped to 1.7% in April. Now that's actually lower than the bank's target. But dig a little deeper and it's a different story. The core inflation rate, that's the one that ignores stuff like gas and food prices, is still sitting at 3.15%. Now that's above the comfort zone. The bank's sweet spot is between 1 and 3%. So they are in a tricky spot right now. Inflation overall is dropping, which is good, but core prices are still sticky, which is not so good. Now, let's get into the big wild card in all of this, which is the US trade policy. The US just doubled their tariffs on Canadian steel and aluminum up to 50%. Now that's huge. Canada is trying to negotiate and keep things calm, but honestly, no one really knows how it's going to play out. And when it comes to central banks, the one thing that they hate the most is uncertainty. Now, Governor Macklem said that they are being cautious because of this. And if things go badly with trade, if the economy slows down or if jobs start getting cut, the bank might actually reduce interest rates in the coming months. But they're not there yet. Okay, so what does all this mean for you? If you have a variable rate mortgage, you are safe for now. Your payments shouldn't go up. If you're carrying credit card debt or personal loans, no change there either. It stays the same. If you're thinking of buying a home, this pause might keep the market from getting too hot too fast. It gives a bit of a breathing room. And if you are an investor, well, the markets are watching trade news very closely. Expect a bit of a wait and watch mood. My advice, do not overreact to this announcement. Yes, it's important, but look at the trends, not just the headlines. So what's next? The bank's next rate decision comes out on July 30th. And that's when they might consider a rate cut, but only if inflation keeps cooling and this trade mess with the US gets worse. Until then, they are being extra careful. And maybe that's a good thing. You don't want central bank making knee-jerk moves just to look active. All right, that's your quick and clear breakdown of today's Bank of Canada's decision. Hope this helped you understand what's going on and what it means for your wallet. If you like this explanation, give this video a thumbs up. It really helps more people find this content. And if you're new here, hit that subscribe button for no-nonsense money talk. I'm Brijesh Kapoor, and I'm going to see you in the next one.